Welcome to the Real Estate Standard. I'm Tim Kotzman. I'm here with Kenny and Chris. And today we're going to cover a couple of things, including energy, loans, treasury, rent payments, and raising equity. And maybe start with how all this came about and maybe comparing and contrasting Bitcoin and real estate a little bit. So, Kenny, how did this all come about? And I think we're going to be a little more relaxed on this, right? First of all, episode 1. So congratulations and thanks for tuning in. Congratulations to us. That sounds weird. And thanks for tuning in. Maybe a little bit more relaxed, right? Why wait until the new year when you can just start something in December? So week of December 8th, 2025. Maybe a little bit more relaxed now that I've said that 3 or 4 times. I might take the coat off. Anything's possible. Over to you, Kenny.
Hey Tim, thanks for putting this together and taking us seriously and committing to starting a podcast with Chris and myself. And I give you kind of like a quick overview. It was just kind of me reaching out to, well, first I attended your conference in New York, which was great. I haven't been to many conferences to compare it to, but it was like,
The
you know,
best ever, then. It
I'm
was the best ever.
for me, it was the best. Yeah. No, it was really great. It was like high signal. There was like a lot of, interaction with it was like I think only like 400 people. So it was like, compact enough to meet a lot of people and like spend time, talking to people and get some good connections. And we connected. And then shortly after, you visited West Main Self Storage so it was me reaching out to you, and then I reached out to Chris. I saw Chris put out some great content. I noticed he was in Orange County, and I was like, I got to reach out to Chris and put together like a real estate squad to talk real estate Bitcoin. So
And here we are.
Yeah,
Chris?
the internet's a powerful thing. The internet is a powerful thing. I mean, just connecting with each of you through the Twitter sphere and being able to nerd out on, on these topics that are Bitcoin and real estate is super exciting. And Kenny, I think you're, blazing a real trail here with West Main Storage and trying to understand and integrate Bitcoin into the asset itself and try to understand how to do that and what that means for not just the one asset itself, but for for a larger portfolio and the broader industry as well. So that's what I'm excited about. And I've been talking a lot on the internet about the intersection of these two assets and trying to understand what it means and how to navigate it. And we are incredibly early in it. That's one thing I found out very quickly was that living in my own echo chamber was one thing, but um, being able to see where the puck is going and doing everything we can to put our brains together and understand how to navigate it and how to use this disruptive period to our advantage is, I mean, it's something that gets me out of bed in the morning and keeps me excited about the real estate world.
yeah, and in particular, what's got me really excited about real estate and Bitcoin is it's finally emerging as a collateral. And that's exciting. We're seeing it with strategies. They're using digital credit. They're not pledging it, so it's like still unencumbered Bitcoin, but they're like, we don't have to get into that. But I think what that means for people in real estate is like it's another form. It's a dual collateral, and I think you mentioned something along that on your X post recently, and that intersection right there where you can borrow against your Bitcoin holdings to acquire real estate, things like that, are really interesting. So if you have say you're a company with 1,000 Bitcoin, you can borrow against that Bitcoin and use cash and be a cash buyer in the market to acquire real estate, and then go to a traditional type of lender refinance and be able to pay off the Bitcoin loan, or you can service the debt with the real estate cash flow. It's a real neat intersection where you can actually start to utilize your Bitcoin and actually monetize it too. So if you're like coming from a Bitcoin standard, where you don't have cash, you have Bitcoin, you have 1,000 Bitcoin. What do you do with that 1,000 Bitcoin? Well, now you can borrow maybe 10, 15%, um, take the 10, $15 million, go acquire a self-storage facility, something like that, and be you're going to have a competitive advantage in the marketplace because one, you're going to be an all cash buyer now because you just pledged the Bitcoin and you took fiat. So now you have cash to go be a cash buyer in the marketplace, and then the cash flow is already worth more to you because you're operating on a Bitcoin standard. So if you assume a 30% CAGR, that Bitcoin's going to appreciate at a 30% CAGR. Well, that cash flow that you're buying, that's what, when you go out to buy these facilities, that's what you're buying is the cash flow. Well, that's worth more to you. It's worth 30% more. So, I think there's going to be a lot of new players and a lot of new industries and in the real estate market. But I'm just so excited to talk about that. I don't know what you guys think because I don't think we've really talked about that too much.
Yeah, I mean, I think the use cases are tremendous, and the collateral piece is one of them. I kind of think of, when I think about it, real estate is really used kind of in three, primary verticals, right? Whether it's a store of value, collateral, or for cash flows. And you start to look at real estate and now Bitcoin, and Bitcoin beats it in all three categories. Cash flow was the last piece of the puzzle, and now strategies, perpetual preferred offerings are offering cash flow built on Bitcoin that pays 5, 6 percentage points more than real estate does, and doesn't carry any of the management or any of the risk. So, when you look at any one of these three verticals, um, you realize that this is an inflection point for real estate. This is a bigger, badder competitor that just entered the arena, and the real estate operators need to understand what this is. They need to get educated on it, and they need to start figuring out how to utilize this new tool in their portfolio. Whether it's the collateral scenario you just laid out, Kenny, or otherwise, because if they don't, they're going to eventually get washed out, and they'll be handing the keys over to an operator that does understand it, and has it integrated. And maybe that's actually even a little hyperbolic. But maybe you don't necessarily get washed out, or hand over the keys. Maybe you have a scenario where you're able to keep, you're operating, in the black, and keep the building maintained and well occupied. But what kind of returns are you actually making at that point, right? I mean, you fast forward this into the back half of this decade, the inflation's not slowing down anytime soon. The printing's not slowing down anytime soon. And Bitcoin adoption and hurdle rates are, they're here to stay. So, grandma, grandpa that owns this, the little income property for X number of years, and it's stabilized and produces a nice cash flow stream for them. I mean, what are you getting on that thing a year? 4 or 5, maybe 6%. I mean, you're getting killed by inflation at that point. So if that's where you're comfortable operating in, and staying in that world, that's fine, but you will never get ahead. You will always be on the transaction treadmill, is a term we use in CRE brokerage. You will always be chasing the next opportunity, the next deal. You will
Well, I
never
wanted to
escape the
push back
matrix.
on that a little bit because we kind of joke around where like I'm kind of like a moon bear in a sense because I argue, is it really better to sell your property and buy Bitcoin, or is it better to maybe refinance your property and use the proceeds to buy Bitcoin, hang on to the property? And it reminds me because we have two different backgrounds when it comes to commercial real estate. I've worked as a property manager and property maintenance, as an owner operator, as a developer, and you know from my understanding, your most of your career, you've been a broker, commercial broker, renting, leasing, and selling industrial spaces. So we have kind of two different views on the real estate, and don't necessarily agree on everything, but we do agree a lot. So I wanted to kind of explore like what when it makes sense to there's let me kind of back up. I'm rambling, but this is what this podcast is for. It's going to be a raw, unfiltered kind of real estate podcast. But there's a saying in real estate that you can't afford to sell. And that's especially true when you develop the property or you add a lot of sweat equity into the property and you have a low cost basis. So when you go to sell the property, you're looking at you know, a huge tax number that would be due on sale after you pay off the mortgage, and you're often left with very little after the taxes. And one of the ways that real estate investors think, and how we think, is we think about depreciation. We think about, the refinancing opportunities where you can pull cash out of the property tax free. And at a certain point, after operating the property for a certain period of time, you recoup your initial investment. And so you're just really selling a golden goose at some points. Some properties, maybe they don't have good tenants, they're not in a good location, and this doesn't apply. But if you have a good cash flowing property that's occupied, and you have good tenants, and it's performing well, it can be a tool to accumulate Bitcoin more than had you just sold and took the tax hit and paid it, because as we know, Bitcoin doesn't go up in a straight line, right? I mean, we often talk about in these conversations that Bitcoin's going to be at a 30% CAGR, but what we're seeing here now is, a significant pullback from where we were just a few months ago, and that creates opportunities. That creates opportunities to refinance, and with commercial real estate, timing your refinance has always been important. So there's a lot of treasury companies now that are like, hey, just don't worry about it, just kind of buy and get on and like raise more money and buy again and again and create this flywheel. But that's easier said than done for a lot of companies. Not everybody has an ATM that they can hit every week to buy Bitcoin. So if you're going to like refinance, normally you're going to do that once or twice a decade. And you want to, do that when interest rates are low. You don't want to lock in a high rate that is going to have a cap, or something that prevents you from there's normally penalties, if you refinance in a certain period of time, 5, 4, 3, 2, 1. Sure, you're familiar with that type of thing. Um, and yeah, I've been kind of rambling. I don't know if you want to pick that apart, but I just have a hard time thinking that it's a one size fits all solution where you sell your real estate, you buy the Bitcoin. Um, and had real estate operators done that just a few months ago, they'd be in a paper loss now, right? And everyone knows, it's a long-term asset, so you want to hold for four or more years, preferably a decade. And that's how real estate investors look anyway, right? When you're building out a facility, you're you're going to have a 12 to 24 month construction period. You're going to have a lease up period. So before you even bring in your first dollar, it's going to be 3, 4 years. So I think real estate investors are used to that. But yeah, I wanted to kind of pick apart that and see if we can
Yeah.
agree on some stuff there.
No, I think we agree on a lot more than we don't. It's first off, it's definitely not an all or nothing scenario, right? It's not a one directional situation. That said, I do think that most the opportunity cost for most real estate investors is probably just focus on Bitcoin, right? I think we saw that in this past cycle, 21 and 22. Now that you're no longer in a low interest rate environment, cost of capital is much higher, materials and labor are through the roof. Tenants and occupants are a lot more discerning about where they're doing business, where they're, signing leases. So with some of those forces at play, it's really kind of exposed the really savvy operators from the average Joes. So that's what I'll just say on kind of the one size fits all comment. Um, Beyond that, I mean, real estate is how do I want to say that? The scenario you laid out as far as like the scenario you painted, it involved a long duration time horizon. It involved specialized expertise and a skill set, right, Kenny? I mean, as far as operating whether it's a storage facility or a retail center, right, an industrial warehouse, they take a specific skill set, right? Whether it's managing the tenants or knowing when to do that refinance and how to use those proceeds, right? I mean, there's a lot of thought that goes into that, and if you're not being methodical and intentional about how you're approaching that, you're going to get eventually washed out. And I think real estate is not about to, it is getting exponentially more difficult to remain profitable as an operator. So I think you're going to continue to see that bar get raised for what it means to be successful, competitive, and profitable as a real estate investor. The third piece of it is, or the last piece of it is understanding the existing inventory, right? The inventory, the over 60% of the inventory in the United States across the major asset types, office, industrial, apartments, and retail, over 60% of it was built in before 1990, right? So that was a completely different era, different business models, different economics, different technologies, different consumer and tenant demands. So there is a large percentage of that stock that's functionally and structurally obsolete. And in the environment that we find ourselves in today, the amount of capital that it takes to bring some of those properties up to today's standards, it doesn't really matter because, again, they're structurally obsolete. So that's where I kind of bring this back to Main Street is, who owns a lot of that? It's me, it's you, it's mom, dad, small business owners, small fund operators that think this is just another business cycle or another real estate cycle, and it's not, right? I mean, I think you and I agree on that through and through, is that this is a structural shift in the asset class, and if you're not paying attention and not following and trying to get educated on how to navigate it, you're going to have a very, very difficult time.
Do you guys have some examples from conversations or from events, conferences that you've attended that kind of illustrate how early we are in the conversation in real estate circles when it comes to Bitcoin as an asset class, as collateral, as these different things?
Yeah, and to say we're early is an understatement. I mean, we are very, very beginning days here. You think back to all the pushback that the corporate finance community is giving the hurdle rate guys and the true north guys. Real estate is even earlier than that. And that is evidenced in, just my personal experience, within the industry, talking to colleagues, talking to partners, putting stuff out on the internet. The biggest piece of feedback or negative feedback, I should say, is if you like Bitcoin so much, why don't you just go buy Bitcoin, right? It doesn't have a seat at this table. Um, that said, there are some really exciting examples that we can point to today that are adopting a Bitcoin strategy of some sort. Um, Cardone Capital is one of them. Grant Cardone and his team are doing the treasury strategy with one of their properties down in Florida. The Caruso Properties is a major retail and apartment landlord in Los Angeles. Their founder and CEO is named Rick Caruso. He actually ran for LA mayor last election cycle, so he's a household name. His firm has a couple $1 billion under management, and they adopted a Bitcoin treasury strategy in 2021. I believe they had allocated 1% of their reserves into Bitcoin. And at that same time, they rolled out a policy where their tenants can pay their rent in Bitcoin. So that's a really big one, especially for the operators on the West Coast. Caruso Properties is a household name. They're a big player. On the international stage, there's Murano Hospitality. They're a hospitality operator based out of, I believe it's Mexico City. They also have a couple $1 billion portfolio, and they're a publicly traded firm. You can look them up as well. And they have a treasury standard, and they also have implemented Bitcoin in their operations, their loyalty programs, their I don't know offhand if it was just the uh, paying rents and everything, but it was definitely customer loyalty points was part of their operational strategy. So those are some three really big operators, some household names that will get the real estate community to, pause and take a closer look at it. The Just from my personal experience, the last handful of months talking about this online, there has been dozens of smaller private operators like you, Kenny, families, groups of partners that have reached out and have shared their story, shared their strategies with me, and they're the smaller operators in the market that have very respectable holdings, but they're not in the daily headlines. They're not on social media. They're staying humble, stacking sats, and operating their real estate, which they know very well. It provides their family with a good income, and they're hedging their bets with Bitcoin at the same time. So it's
Yeah,
happening,
Tim.
Tim. It's just not happening as fast as some of us may want it to.
Yeah, Tim, what I'll say is I said in the beginning, thanks for taking us seriously because every time I bring it up, it's kind of like I'm like a laughing joke. Like, nobody is really thinking in the way that we've been talking here. I think transacting, like there's been some houses that have sold for Bitcoin. I think also Cardone sold one of his houses for Bitcoin. I think Sotheby's, if that's how you pronounce it. I think they're doing something about accepting payments, and I think that's an area where real estate professionals can stand out amongst the crowd is if they're prepared to help their seller or buyer transact in Bitcoin if that's what one of the parties, the selling party, is looking for, or the buyer is looking for. If they're able to facilitate that, and whether that's helping them you know run a node or verify the transaction or get set up with an exchange or a wallet or self custody or a third party custody provider, all those things are going to be valuable for real estate professionals to know, to be able to help their clients that get offers for Bitcoin for their properties. Because I think that, you know, the thing that I keep coming back to, and I'm sorry for kind of changing the topic a little bit here, but the thing I keep coming back to is the Bitcoin companies coming into the real estate space in a sense, like where like we've been talking about real estate guys coming into Bitcoin and buying Bitcoin or putting a percentage of their holdings there or selling their property for Bitcoin. But I'm really excited about this collateral thing where say a Bitcoin company that's got thousands of Bitcoin, we can just roll with strategy. If they were to put, if they were to pledge 10% of their Bitcoin, they could go out and buy 600, 700 storage facilities. And now they have cash flow. And I think what that does is that kind of silences the FUD to a certain extent. Now you have real tangible property that you're pairing with the Bitcoin holdings. It's like, they just added a USD reserve, treasury reserve. What if they had a real estate reserve? So in addition to just having US dollars and Bitcoin, but now they got, $6 billion of real estate.
Yeah, no, that's a fun one to play out. I mean, I've been waiting for one of these treasury companies that has no underlying, operating business to, realize that there's a huge opportunity, a $300 trillion plus opportunity in the real estate industry here to, leverage that Bitcoin stack they have to go buy high quality real estate assets. That one's gonna come.
The real cool thing is, so they're monetizing their Bitcoin and they're using it like a bridge loan, right? So like you're doing it to acquire the property. In 30, 60 days, you can go to a traditional bank, refinance it, pay off the Bitcoin loan. Now your Bitcoin is unencumbered again. It's free and clear, right? Like, and
Yep.
you can go do it again, and it's like a flywheel to acquire real estate. Now, you alluded to, having an operating team and people that can manage the facilities or the type of real estate. And, that's a valid point because, there's, not everyone is equipped to do that. But that's why it's an opportunity, right? That's why it hasn't been done yet, probably. Like there's a lot of moving parts. And the opportunity's just kind of beginning, right? Because we're seeing JP Morgan is going to offer some kind of Bitcoin backed loans. Strike has been offering them. The problem with the Bitcoin loans is they're very short duration. Real estate is the only thing that has long-term duration that like the average Joe can get access to. Unless you're like a nation state, like how are you going to go borrow over 30 years? Now they're talking about 50-year mortgages, right? So if you can pair that long-term debt with Bitcoin, I mean, that's to me a winning strategy. And you got like the best of both worlds because now the you're going to be able to get the legacy kind of finance on board because you have the old school collateral, you have the real estate. They understand the real estate. And the one thing like, I agree Bitcoin is going to be better collateral because you don't pay, there's no list the property for sale, get a broker, do the walkthroughs and auction it off. Um, you're able to just liquidate the Bitcoin.
Your comment on speeding up the credit cycle for real estate is interesting, right? Because I mean that was one of the big aha moments that the marketplace had with Saylor was he was basically doing the real estate play that he was doing the same play that real estate operators had you know perfected, except he was able to do it, every few days, every couple of weeks, rather than 5 or 7 year time periods, right? So that's actually it's an interesting point. I'll be curious to see how that plays out and if operators actually take advantage of that acceleration option. The one thing that comes to mind, and maybe even a potential hurdle, is how much how much time and legwork goes like once you close on a property, how much effort then is how much work is then put into play once you've acquired the property, right? Getting your arms around that asset, understanding the tenant base, all of that. I mean, obviously, you've done a lot of the heavy lift before you've acquired the property, but I don't want to overlook or understate the amount of effort that goes into running a property post close, as you know, right? So that'll be a delicate balance, but I think there's um, some interesting options there to players that are positioned properly, right? Because if we all, I think we all have the same, at least general framework of where the real estate world is going over the next decade. And if that plays out to, just a small amount, or just a small percentage of what we think it's going to be, there's going to be a lot of opportunities to pick up high quality trophy real estate on the courthouse steps for pennies on the dollar. And the ones that are going to have the greatest advantage are going to be the ones that can move quickly. And I'd probably make the argument that the guy or the company that's got the large Bitcoin stack and can, transact quicker, like you described, Kenny, are going to have that competitive advantage. That's interesting. I had not thought about that angle just yet.
Yeah, I mean, this is kind of one area where we kind of agree mostly, and like I have a little kind of different view is I think we're in like a everything bubble where everything just goes up, and like, Bitcoin is one of the fastest horses in the race. We've seen, that, there's like a big AI boom too, and it's like fighting for um energy, right? Like it's like the two biggest energy sources are, or like demand, I should say. The two biggest energy demand generators are AI and Bitcoin. I think Elon Musk had a tweet today that said exawatt or bust or something or you're not
I didn't see that
real.
one.
Yeah, so like Bitcoin is in the exahash, like we've kind of clipped at that a little bit recently here. And so um I thought that was kind of interesting, like that the two like biggest energy demand is coming from AI and Bitcoin. So like that's something we all kind of know, but it's it kind of ties into real estate because you need physical space for this energy generation, right? Like so to create the energy, you need real estate. I think that's another area of real estate that we could get into, um, where you know Bitcoin is great, but I just don't like if everybody sells everything and buys Bitcoin, like how does that work out? Like I just don't see how, like not everyone can sell everything and just buy Bitcoin. There's still got to be people to like operate businesses. I mean, unless the robots are going to do everything for us, which I think a lot of people are pricing in a little too soon. I don't know how long that all takes, but for the, even with that scenario there, we require space to manufacture, to produce energy. Even like if you're like a cold storage kind of guy, like you need real, like you're going to want real estate to store your seed phrase, your backup plates. You're going to need some physical space. It's not going away. So that's the one thing I think makes it real estate, like has made real estate like the best collateral, is like it's very difficult to steal somebody's land, right? Or to um make the property go away. Like there's even if there's like the Malibu fires that just happened, right? Like the dirt is still there. Like you don't, like there's no total loss. So pairing Bitcoin with real estate, it just gets my mind going in like a million different directions, thinking about all the touching points there. But Tim, we've been hogging the mic. I know that you have some real estate background, like early on in your career. I think it was you and your uncle did a flip or something, but you were also involved with solar projects and scouting for land and securing some serious acreage for these massive solar projects. So I kind of wanted to hear from you on that.
Yeah, it's just interesting whether it's the human capital versus the digital capital part of all of this, where maybe with real estate, you actually need less people than a lot of other industries, but it still does take, to Chris's point, a certain amount of a skill set and a certain amount of human capital, human labor to make sure these things are operating. I think the fact that, yeah, you can't really like abracadabra a building away is probably a positive thing, but same thing with Bitcoin. So just comparing and contrasting a lot of these things. I'm looking at Chris's background. I'm like, what if those buildings just disappeared, right? So that's not probably going to happen unless it's an accident or time to put a new building up there. But yeah, I think this whole topic of the real estate standard, which we've discussed privately before we ever started rolling, that this is real estate. Everybody understands what real estate is because they live somewhere. A lot of people see people in their family or someone on some sort of traditional or social media that's saying, hey, you should invest in apartment buildings. You shouldn't own one door. You should own 1,000 doors. And so it's so ubiquitous that I think talking through the strong points of real estate and this transition and this intersection is just something that hopefully people will enjoy. Hopefully we think it's something that
we're going to find out.
We think, I think I can speak for all of us. We think it's something that the market needs, as more of a conversation, and again, to the podcast medium, something that's more of a long form conversation and not just a sound bite. I think, Chris, what is the gentleman's name that's doing a lot of I don't know if it was $10 million or $100 million worth of originations with real estate?
Andrew Hones with Battery Finance.
Mm-hmm. So there is.
I think he's a little bit more well known in the Bitcoin community as opposed to the mainstream real estate world.
Mm-hmm.
But that is going to change in the very near future. I mean, the one deal that we had talked about, that first he did a 63 unit apartment complex in Philadelphia. It was a cash out refi, and they used a portion of the proceeds to buy Bitcoin. And that was really the first of its kind. And that deal actually won the CoStar Impact Award of the year in the Philadelphia market. And I bring that up because if you're in commercial real estate, CoStar is like a staple in your business. I mean, they are the largest data provider in the space. So for a major incumbent like CoStar to acknowledge and highlight that type of a transaction was, I mean, there was some signal there if you were paying attention. But anyway, I don't mean to cut you off there, Tim, but that was just one deal. I think they did $100 million worth of deals in the month of November. That was across half a dozen different assets. And those assets were, it wasn't isolated to one type of property. It really spanned the gamut. There was a student housing facility. There was a FedEx distribution facility. There was an office building. So that's really exciting because he's, not only showing that there's a market for this, but it's applicable to all of these different property types, which in commercial real estate, you typically specialize by property type, because each of them has, their own nuances and, quirks that come with them. And you really kind of lean into one, maybe two of them, and become an expert in that particular type of property. So.
Can you speak at all to why it may have taken until, what was it, earlier this year or maybe 2024 when he did that first deal? And now, is there still a barrier to entry or barriers to entry?
It's definitely not deal volume. There's plenty of deals that are finding him. The bottleneck is capital. So that's the big challenge. And I think with some of the regulation that was, removed throughout the course of 2025, will be super helpful as we go into 2026. I mean, we got JP Morgan, supposedly, with their loan products coming out to their consumers at the end of this year. That'll be a big tailwind for the space and hopefully, bring a bunch of others along with them. I mean, that was actually a lot of people have asked me like what was kind of what I saw as like the first stepping stone into this Bitcoin real estate strategy. And I always thought it was going to be the treasury strategy, right? Allocate certain percentage of your free cash flow to Bitcoin and play around with it from there, right? See what it's like, see how it performs. But now I think I almost have to, maybe U-turn that one a little bit. I think the loan piece, Kenny, to your excitement, is going to be the bigger onboard for most of the real estate operators, simply because not only adoption, but the points of friction are going to be um, stripped away, right? So think about the operator that owns real estate today. They have a loan on it, and that loan's going to come due in 2027, 2027, 2028. And when that time comes, they're going to go to their banker, open up that conversation, and there's going to come a day where that banker says, okay, here's your options. You got half a dozen, whatever it is. And one of those options is a dual collateral Bitcoin loan, right? And it's going to be the new product. It's going to have the highest, returns. It's going to have better terms because of the way it's structured and the way the incentives are aligned. And it's going to be a really easy sell for these relationship managers to say, to explain the Bitcoin loan and what it offers. And I think once that happens and the borrowers are, essentially educated, and again, it's coming from their existing banking relationship, so it's going to have that, you know, um, safety stamp of approval on it. Majority of these operators are going to opt for that hybrid structure, and that's how they're going to get
That
onboarded.
I mean that's something we're thinking at West Main because we're carrying $4.2 million of debt that's going to balloon in August of 27. So kind of similar to the analogy that you have. And I alluded to it earlier when we were speaking, but timing that refinance is important. We're not necessarily going to wait to the last month to refinance, right? You know, we've we're at the tail end here, so there's no penalty, at least in our situation. Depends on how your loans are structured, but um, we're going to be looking to borrow and hopefully we can find a lender like you described, Andrew, over at Battery to over lend, right? Essentially, they're like, if you need $10 million, or if you're looking to finance $10 million, they're like, hey, why don't you take 12 million and we'll put 2 million in the Bitcoin and we'll split the upside. And that's locked for 4 years. And that's something extra for them to grab at if you default or if your debt coverage drops. It can help there.
And let's just play out with a West Main scenario for everybody real quick, Kenny, right? Like you're a forward-looking operator, right? You're paying attention to what's happening here, but you also probably have an interest rate that's, what, high threes, low fours.
Yeah, we're at 3.66%. So we don't
There you
necessarily
go.
want to ditch that because we're looking at 6% right now. I'm thinking we'll be in the fives, maybe hopefully in the fours when we do pull the trigger. But we're also looking at the price of Bitcoin too, right? Because now you have the interest rate and the Bitcoin to look at. So you have another variable here, which you didn't have before. Before you're just laser focused on the interest rates and you're like, I want to lock in that low rate. But now you're like, hey, you know what, I'll lock in a 5 because Bitcoin's at 80,000 and I'm going to sweep this cash right into Bitcoin. And I think that's what we mean when we're talking about the Bitcoin standard, or sorry, the the real estate standard. We're talking about really squeezing the rag and trying to get all the sats that you can out of all the different use cases for real estate and the different angles there. And I did want to quickly mention that you guys were talking about the sailor analogies that he did early on with cyber Manhattan, and it's like owning real estate, and you said how it's very similar. And I think, when he started doing that, it really clicked for me. I was already a Bitcoiner, but like those analogies really hit home. Coming like with when you're in the real estate space and you hear this stuff, it just like blows your mind, right? Because you're able to kind of relate to it so much. And I think that's why we all decided, hey, we need to start this weekly podcast here, so we can like reach more people. That's a large bucket of people have real estate, like you mentioned. They live in a house or they live in an apartment, and they interact with real estate every day of their life. They walk around, and go into buildings and stores, and um, so it's ingrained in everyday life.
It's I think to you going back to the loan point, it's going to be really cool when everybody stops living and dying by the interest rate and they start, bragging about how long they got their Bitcoin loan for, how long their Bitcoin's locked up for, what that duration is. That'll be a fun time for sure.
And it's kind of too, the other side of that is like the Bitcoiner who's already, or the Bitcoin company that's all in on Bitcoin, and that's all they have, right? They got 1,000 Bitcoin, and they're like, okay, I'm going to go buy real estate with this Bitcoin instead of selling the real estate or selling the Bitcoin. They can borrow against it to acquire. I think that like that's where I get most excited, is like coming from a Bitcoiner to like acquire the real estate, because you're not selling your Bitcoin, right? And you're actually, and you're getting the cash flow. That's something that like Bitcoin hasn't, there's been the strategy products that you talked about, but that still doesn't, they still need to sell more preferreds, or we just saw this week they really hit the ATM hard on the common shares. So like the preferreds aren't carrying the weight, and the real estate is a real machine that can, right? Like it can spit out cash flow to pay dividends.
Yeah. I mean, I say it all the time. My favorite part of being in the commercial real estate world, particularly as a broker, is seeing and just understanding all the different ways people make money, right? Whether it's your business, your day-to-day business, you're occupying space and you manufacture some kind of widget, or you're running some kind of small investment portfolio and you have a particular niche or edge that you implement in your strategy. I mean, that's hands down the best part about being in the commercial real estate space. And now with this new era that we're going into, right? The real estate standard. I love the title because it starts to really underscore all these different ways that you can um, improve real estate operations, but also how Bitcoin is woven through each of these, critical pillars, right? Whether it's your treasury, your treasury strategy, your capital stack, and your financing mechanisms, how you raise equity, right? Your energy systems and how Bitcoin mining can get implemented into building infrastructure. There are so many different ways that operators and investors can get creative in how they do this and how they get exposure to this new tool, this new asset. I think that's why one of the things I'm most excited about doing this podcast is just learning this in real time and tinkering with different things and understanding and figuring out what works and what doesn't, what's optimal and what's less optimal. That's really exciting for me. So we're not trying to pretend like we have all the answers here by any stretch of the imagination. So if there's something we're saying here and you have an experience or a perspective that suggests otherwise, we want to hear from you. Put it in the comments section, DM us, and let's have that conversation. There's no dumb
And we're
questions
gonna
here.
do a spaces too, so like we're gonna have live interaction there, right? Hopefully, some of you guys are seeing this and you want to raise your hand and come on stage and point something out.
Yeah.
When is that, Tim? Do you know when we're gonna do that? Are we gonna do a spaces this week?
Yeah, so we'll announce that along with the live stream. We'll be announcing that here shortly. So stay tuned.
Beautiful. The last thing I just want to say here that was, just one thing I was thinking about before we jumped on here today was the strategy preferred option, the STRK, right? I mean, for the real estate operator we talked about briefly in the beginning here that doesn't necessarily have an edge, right? They don't have a strategy, maybe they don't have the time or even an interest in putting the effort into running the property that it needs, right? I mean, that is the perfect candidate to exit, right? To your point, Kenny, not everyone needs to sell and migrate their capital, but for those that do, right, and they still want the upside exposure, they need the cash flow. I think about STRK as digital real estate, right? Because you have that $100 liquidation value. That's your land, right? You use the Palisades fire example earlier. That's your land value, right? You're getting 8-9% cash flow along the way, and then sometime in the future you have the option, right? Not the obligation to sell at an appreciated price. If that doesn't, describe real estate, I don't know what does. So it'll be interesting to see how the market takes to the STRK product in particular.
Yeah, I actually can make one last comment on what you just said too, because I do some consulting work and I had somebody reach out and they were looking, they wanted to keep their cash flow and they were looking for Bitcoin exposure, and this was a couple months ago, and they refinanced the property and they took the money and they bought STRC. And here's the thing, the loan payment went up, right? So like they have less cash flow from the real estate, but the income that they're generating from STRC from Stretch is more when you add it up, when you add the real estate cash flow now with the additional Stretch income, it's more than what they had before, even though that they just refinanced at a slightly higher rate. Or well, it's kind of like double the rate. But yeah, so these tools, I think, you know, I mentioned that like a lot of real estate guys, they make their money from the refinance. Like, the cash flows are substantial and everything, but the refinance is where a lot of money is pulled out tax free. And instead of them, normally I would see a lot of real estate guys, and they would they would do a cash out refi, and they'd use that as a down payment on another property. And I think moving forward, a real option here is going to be, instead of going into another property, they're either going to buy Bitcoin, or if they still need the cash flow, they're going to just go into one of strategy preferreds, or Metaplanet's got their preferred, and Strive has a preferred. I think there'll be other companies in the future that will offer preferreds that they can tap that. So it's very exciting, and I'm excited to like you know explore this and follow it and adopt it.
Yeah, likewise. It's going to be the optionality that these real estate investors and operators have is going to be mind blowing. It's going to be really cool to see how they structure their holdings, how they structure their portfolios because of these new tools.
Awesome. Any other closing thoughts?
Yeah, I just want to reiterate that, I acknowledge how early we are in this process and this transition, but I would also encourage you, if you're a seasoned real estate operator or investor, to, not turn a blind eye to this and give it some thought. Start educating yourself on what Bitcoin is and how it can improve and enhance the real estate asset itself. Because I think Kenny and I covered a lot of it here today, like how many different ways it can be integrated into real estate, which is ultimately going to produce better returns and make the assets more resilient. So that would be my advice to the real estate folks out there is just give this an opportunity.
Kenny, any final thoughts for episode 1 of the Real Estate Standard?
Yeah, final thought here is I've been waiting, looking and searching for real estate Bitcoin content, and it was just kind of few far in between. And thought, hey, why don't I reach out to some guys in the space that know Bitcoin, that know real estate, and have an interest, and have complementary skill sets, and give it a shot, and start talking, and just do things. So here we are.
Make things happen, baby.
Awesome. Well, yeah, thanks everybody for listening and watching. And yeah, keep your eye out for X Spaces and live streams that we're going to be launching as well. And we'll see you next week here on the Real Estate Standard.